Hey everyone, I'm Jeanette Mulvey, the Editor-in-Chief of CO by the U.S. Chamber of Commerce. Welcome to our first small business update of 2024. I'm so excited that you're here. So today we're going to talk about the economic outlook, about issues impacting small businesses, and about what you can expect this year. Now this is one of many events that CO holds throughout the year, and I would be remiss if I didn't thank our sponsors, Brevo, Dell Technologies, FedEx, Oracle NetSuite, Iron Mountain, and Walmart Business. Without you, we wouldn't be able to put on this great event series for our audience. All right, so I'd like to welcome Neil Bradley, Executive Vice President, Chief Policy Officer, and Head of Strategic Advocacy here at the U.S. Chamber of Commerce in Washington, D.C. Thank you, Neil.
It's great to be with you again.
Yes, it is. Okay, so let's talk about the economy first. Just set the stage for us. What is the state of the economy overall?
It's remarkably strong. You know, we just got the economic numbers for the fourth quarter of 2023, and thus now we have numbers for the whole year. Last year, the economy grew at 3.1%. That is above our normal average. The fourth quarter was even better at 3.3% growth, so it wasn't like we were slowing. We were actually gaining speed towards the end of last year. Of course, if you look at unemployment, for a lot of people, that's a good gauge of where the economy is. We're at 3.7% unemployment. By every historical standard, that is an incredibly tight labor market. Now, I think all of this surprised a lot of people. If you think back a year ago, a lot of commentators were saying, 2023, we're going to have this recession, the economy is going to be really bad. I say with a modest amount of pride that from the U.S. Chamber that we didn't actually buy that. Our team believed that we were likely to avoid a recession and that we would have growth. And the reason is we talked to businesses all over the country of all different sizes across industries. And they were telling us fascinating things last year. When we would ask them about the economy, they would often say, well, you know, I'm worried. I'm worried about the national economy. When we'd ask them about, well, how about your local economy? Well, I feel pretty good about that. How about your business? Oh my goodness, my biggest problem with my business is I can't keep up with demand. And when you hear that across the country, across industries, you get a pretty good indication that maybe some of the national stories and the national numbers weren't telling us what was really going on in businesses across the country. So to answer your question, all in all, it was a pretty good news story about the economy.
That's great. So how does that translate into inflation? Is it slowing down? What can we expect this year?
So I think one reason for people being concerned and expressing pessimism is inflation. You know, we haven't had inflation like what we experienced the last couple of years in 40 years, which means for most Americans, their adult lives have never seen inflation like this. And inflation was a big drag on the economy. We had to do something about it. The Federal Reserve raised interest rates. We're not exactly where they want to be, 2% inflation rate yet, but we're quickly moving in that direction. And so even in volatile sectors like energy, we're seeing gas prices come down. That's helping with inflation. So it appears we are on the right track. If we can keep this momentum, we'll keep the economy growing, bringing inflation down, and that's obviously where we want to be.
Okay, so great news
for
everyone so far. Excellent. So you mentioned interest rates. What can we expect this year?
You know, there are lots of people who look at the Federal Reserve and try to predict what they might do. And if you look at the forecast right now, they call for 4 to 6 rate cuts. The most aggressive is 6, and the most conservative at the moment is about 4 to occur this year, likely starting in this summer, with most of the rate cuts occurring in the back half of 2024. And based on the economic data that we have today, that seems about right. 6 may be a little bit high, but certainly we're looking at cuts this year. The only caveat I'd put on that is the Fed is really data dependent. And what they're really concerned about is getting inflation almost under control, taking their foot off, and then watching it accelerate back. And so if there's any sign that inflation is heating back up, some of those rate cuts might not occur.
And for those who don't follow these things as closely, these rate cuts would probably be very small increments over time. Is that generally how it happens?
It tends to be, but again, they're data dependent. So you could see, quarter point rate cuts. But it's possible that they may see that the economy is heating up, or the economy is doing fine, and that inflation's falling, and maybe you get a half a point rate cut at one point. So I wouldn't rule that out, but yes, generally they're small increments.
Okay. So you talked about unemployment, and that number is very low right now.
Very low.
Which, of course, for the economy is good.
Yeah.
But if you're a small business owner
trying
to hire, maybe not so good.
Yes.
So let's talk about that. I mean, we've been talking about the trouble hiring, recruiting, retaining employees, the competitive market for, I don't know, a couple of years now. So is that still, it must still be going on. So what are you seeing there?
That's exactly. Every time I turn on the TV and I hear someone talking about, well, the labor market has cooled and the worker shortage is diminishing, I want to yell at the TV because, one, that's not what's happening in the real world, and even the data doesn't show that. So look at the number of people looking for work, available workers, to open jobs that we currently have. We currently have about 71 people for every 100 open jobs. So even if everyone had the exact right skills, was in the exact right city, we still couldn't fill all of our job openings. Here's the interesting thing. That's not normal. If you go back to kind of pre-2019, the norm in the United States was that in any given month, we had more people looking for work than we had advertised open jobs. That's why we had a higher unemployment rate normally. And so when people say it's returning to normal or cooling off, they're comparing it to maybe a year ago when we had 50 available workers for every 100 jobs. But this is still, by any standard, incredibly tight, very hard for businesses to find workers.
Now, why is that? I mean, where did all these workers go?
Some of it was some COVID effects, and so we did see some early retirements. We saw some dual income households move to single income households. We did see some people leave paid employment to go start their own businesses. By the way, that's a good thing, but now they're trying to hire to compete against the other employers that already existed. But a large part of it's demographics. If you think about the last 30 to 40 years, we had a workforce that was growing because of the baby boom generation. And now we're at the point where the baby boom generation is retiring and they're leaving the workforce. And that means two things: that big cohort of people is not there to work, but they're going to be around, thank goodness, with us for a while in the retirement, and that means they're still consumers, right? They want to go out to restaurants, they want to travel, they're coming into your stores, and so we have a bigger demand because we're trying to meet the needs of a bigger population, but we're at this moment demographically where we have fewer people in their working years to meet that demand. That's why it's not going to go away. So anyone who tells you that this labor shortage, that we're moving through it and it's going to be over, is ignoring what is happening with the demographics of our country and the fact that this is going to be with us for a while.
This is the silver tsunami. I was just reading a headline about it this morning. Yeah. So I was going to ask you, when is this going to return to normal? But you've just told me it's not going to return. This is the new normal. So can you talk a little bit about that? If this is what we can expect for a long time, do you have any thoughts about the trends that you're seeing with what businesses are doing to accommodate for the fact that it's hard to hire?
Well, particularly small businesses have to leverage their natural benefits when it comes to hiring. People want to work for small business because it's a family, and small businesses often have flexibility that you can't get in bigger places. And so I think small businesses have to press that flexibility. Our government needs to do something about legal immigration. We need more people coming here legally who are able to work, coming the right way. But also innovation and automation and artificial intelligence is going to play an important role. And so we talk to lots of small businesses, obviously, who tell us that they're using artificial intelligence, for example, to put together the promotional or advertising material that they used to have an employee do or that they used to have to do themselves. And so this push to using technology to maybe offset what used to be done kind of with human hands is going to be a really important aspect.
And such a positive way to think about AI when
Very
all the
positive.
headlines are, is this going to take our jobs? And the answer is no, this is going to fill jobs that we can't fill.
It is going to save small businesses. It is going to make them more efficient, more productive. It's going to help them grow. It's going to help them meet demand. It is, do not listen to the headlines. This is a good news story.
Yeah, I love that. And we're doing lots of stories on Co about different ways and tools, AI tools that even the smallest businesses can use. Okay, so talking about employees, this is a very complicated issue, but it's really important for small businesses, so I'm hoping you can simplify it. So there has been a new regulation concerning what we call independent contractors, or sometimes people call them 1099 employees, people that are not on your payroll full-time that you pay to do work for you. And it's a little bit confusing. Can you talk about what this new law says and what it means?
Yeah, so this is a new regulation out of the Department of Labor. They're about to make it final. I suspect it will be subject to litigation, maybe even from the U.S. Chamber. We're still exploring what that looks like. But it tries to change what they call the test to determine if someone should be classified as an employee or an independent contractor. Under the old rule, you could basically look at two things. Does the business have direct control over the individual who's doing the work, one? And two, does the person who's been classified as an independent contractor have the ability to have profit or loss on their own, basically to decide their working hours, and by that determination, for example, determine how much they make? That was pretty straightforward. That's getting replaced by what they claim is a 6-part test, but is really a 7-part test because it kind of has this catch-all at the end that includes things like indirect control and reserved control, and a look at like the tools that you bring in, who furnish those tools. And it creates a lot of uncertainty about whether someone is properly classified as an independent contractor. The reason that's important is if the Department of Labor comes in and finds that you misclassified someone, and by the way, they will never tell you that you misclassified someone as an employee when they should have been an independent contractor. They will only come after you for declaring someone as an independent contractor. You're going to have to pay penalties, fines, fees, and back taxes. And so let me give you just one example of one of the things that we're worried about. Let's say you have an independent contractor who's doing work and comes into your facility. And you say, by the way, in our facility, we are really focused on safety. And when you're here, you have to observe our safety protocols. Makes sense. Except it's possible that that is an exercise over control over the employee or the independent contractor that makes them an employee in this circumstance. And so it's little things like that that could easily trip up companies and create this type of legal uncertainty.
So if you're a small business owner, what is the best thing to do right now? Is this do you consult your attorney? Do you consult your accountant? Because this is different, not to make it even more complicated, but this is different than the IRS classification of who gets a 1099 at the end of the year. So if I were a small business owner and I just listened to you say all of that, at the end I would say, okay, but what am I supposed to do?
Right, exactly. So I think the thing to do is if you use a lot of independent contractors, you will want to take a moment and review your policies. And you're going to want to think about, are there any ways that I'm exercising control over these individuals, or it could be alleged? And if that's the case, you might want to sit down with your attorney or your HR experts that you use, just to understand if there's any risk for you here. I don't want people to overreact. Independent contractors are an important way for businesses to be able to operate and function. So your reaction shouldn't be, oh my goodness, I got to get rid of all my independent contractors. Your reaction should be, let me take a look, if I think there's some exposure, let me consult with professionals, and then let me keep an eye on what's happening with this, because this regulation may get struck down by courts, it may be stalled by courts, and in which case you wouldn't want to have made a change when the law or the regulation isn't actually changing.
So we'll write this down as the first question I'll ask you for every small business update.
Absolutely,
for 2024.
please do.
Okay. So we mentioned IRS. Tax season is, if you own a small business, you are working on your taxes right now. What are some of the tax issues this tax season small businesses should be thinking about? Yeah,
so there could be some very last-minute tax changes enacted by Congress that will retroactively apply to last year. And so those could be really important for businesses. So Congress is in the middle of considering a bill that extends some expired provisions that relate to interest deductibility, the ability to expense some capital investments, but most importantly for small businesses, your ability to expense your R&D expenses rather than amortize them. Most small businesses are just learning about the fact that Congress had changed this rule, and that all of a sudden, rather than being able to expense your employees' salaries who may be doing work on developing a new product, that now you have to amortize that, meaning deduct it over a longer period of time. About 3 in 10 small businesses will be impacted by this change. And if you are impacted, if you're one of those 3, the average tax increase is about $58,000. So this is real money, real impact. And if you're in the manufacturing sector or the tech sector, definite real impacts here. What Congress is considering would make that go away. And so you wouldn't owe that $58,000. We would revert to the old law. This bill is going to come up in the House very soon, hopefully in the Senate, and so that's a thing to be watching. It does a couple of other things that businesses will care about. People have probably heard about this $600 reporting threshold for independent work or sales, et cetera. This bill raises that to $1,000, so not a big difference, but important. And it makes real changes to the ability to claim the employee retention tax credit. And so if you're thinking about that, that's something you'll want to be mindful of.
I want to talk about the employee retention tax credit, but I wanted to ask you about the $600 threshold. Is that the peer-to-peer payment?
Yes, correct.
Could we just clarify that?
Yeah,
So you mean if you're accepting money through a payment platform like Venmo or PayPal or something like that, you didn't need to report it. If you were below $600, you didn't need to report it. Now it will be below $1,000.
Now it'll be below $1,000.
Okay. Yeah. So the employee retention tax credit, which at some point became, we lost a word somewhere in there. Now it's the employee retention credit or something. Anyway, but it's all the same thing. So there's been a lot in the news about that. So the IRS stopped processing claims, but was still accepting claims. Where are we? Tell me what's happening.
You've probably seen the advertisements on TV and other places. A bunch of firms popped up to help small businesses or to sell a service to businesses to help them claim the employee retention tax credit. And in exchange, these firms would take a cut of what the employer got back. That was in part because some of the rules were complicated, but some of these firms were suggesting that they could find ways to help companies qualify that maybe your accountant didn't find or traditional tax preparers wouldn't. That caused an explosion in applications for the employee retention tax credit. And unfortunately, there were some unscrupulous actors involved who were convincing businesses to submit applications that they that they didn't qualify for. And so the IRS paused the processing of applications last fall because they were trying to get a handle to make sure there wasn't excessive fraudulent claims. This is really important for businesses too, because by the way, if the IRS paid you back for the employee retention tax credit, and then you paid one of these firms because they helped you get it, let's say 30%, and then later the IRS came back and said, I'm sorry, that was a fraudulent, you shouldn't have gotten that money, you have to pay 100% back to the IRS, and you have the threat of penalties. And so in the midst of trying to figure all of that out, now Congress has come forward with a proposal that puts more penalties on the people who are helping you file those claims, that has more stringent safeguards, and importantly says that no claims for the employee retention tax credit filed after the end of January of this year will be accepted. So your claim has to be in already for it to be accepted. And we should talk about maybe some of the options if you have one of those claims pending, if that's of interest.
Sure.
Yeah, so you should, if you have a claim pending, you should take a look at it and you should say, do I think I qualified for and meet this? And if you did, and if you do think that, then you should proceed because that's money that's owed to you under the law. If you think it's questionable or if you think you don't qualify, the IRS is giving people the option to withdraw their application or to submit additional information without penalty so you can prevent the likelihood that you either get a penalty or that you have your refund reclaimed by the IRS. So it's worth, if you have one of those claims pending, taking a moment and saying, do I really qualify for this and am I certain? And if not, do I want to just withdraw that application?
And I think we didn't say this, but I feel like you alluded to it, that if you used a service that you paid to process this claim for you, I don't know if people are entitled to a refund or not, but it would be worth, I think, investigating.
It is, and there are lawsuits in different states pending right now where folks who've had this happen to them, they got the refund, they paid the service, 30%, and then the IRS came back, are suing to try to get that money back. But it depends on the law, it depends on the contract that you signed.
Yeah, okay. All right, so I think this question is the most important question I'm going to ask you. So everyone, if you've dozed off or got distracted for a second by your email, come back and pay attention, right? The Corporate Transparency Act, which is what I was calling it, and you said that a lot of people refer to it as the Beneficial Ownership Information Reporting Rule.
Yes.
Either one of those probably most of our audience hasn't heard of. So this is a new rule that applies to small businesses. Can you explain what it is and what action they need to take?
Yeah, so this is a new rule by Congress that just took effect that requires companies to report to the government their beneficial owners. So who owns your company? And the definition of ownership includes any other entity or person that has a 25% or more stake in your business, or that exercises control over the business, like they were an owner, even if their share of ownership is below that 25%. So if your business was formed prior to the 1st of 2024, so pre-January 1st, 2024, you have a year to report this information to the government. If you form your business tomorrow, you have 90 days, and in addition to reporting who the owners of the business are, you also have to report if someone directed you or facilitated in the filing or creation of this business. What the government's really trying to get at is to prevent the use of shell companies for money laundering and other illegal purposes, where people try to hide their ownership of a business in order to do illegal things. And so it's an unfortunate burden for lots of the 99.999% of businesses that are 100% legitimate, but that's the reason that the government did it, and that's what's required.
I should add for the audience that on the page where they'll be watching this event, we have a link to how to file that report, and we also some other articles, including one about the peer-to-peer payments. So we'll have a lot of resources there.
Yeah, and this article that you have up is phenomenal because if you go to the government's website, you will not be surprised, because it's the government, that it is really long and lots of complicated steps. And if you have a complicated business, that'll be useful. But if you're just trying to figure this out, the article that you've posted is super helpful.
Great, and it has a link to where you can do that. So in our last few minutes, I guess I just wanted to, this beneficial ownership just kind of points to like a bigger issue that small businesses are always dealing with, but it even just feels more onerous than ever, which is that they're just feeling over-regulated. And if you're a one-person or a three-person business, you know, this is really hard to keep up with all of this. So can you just talk a little bit about that? Because the work that you and your team are doing every day is really exactly about this, about trying to clear these unnecessary roadblocks so that people can run their businesses and focus on what they're good at. So can you talk a little bit about that?
Yeah, I mean, just think about the things we've talked about today. You know, beneficial ownership, brand new reporting requirements, forms you got to fill out, Congress changing the rules after the fact on R&D and the employee retention tax credit and information reporting. And so it's a mess. I mean, you're trying to run your business and you have to navigate this. So one independent contractor rule changes. So what we really try to do at the U.S. Chamber is to bring that small business perspective and take it to regulators and lawmakers. Sometimes we're able to convince them to take the right approach, to make sure that we avoid, for example, a retroactive tax increase, you know, on small businesses. Sometimes we haven't been effective with some of the regulators. And in those instances, we're not afraid to go to court on behalf of America's small businesses and challenge some of this regulatory overreach. So think of us as trying to do a couple of things for all the small businesses out there. One, we're advocating on your behalf when these things are being discussed. Second, when they happen, we want to make sure, particularly in partnership with Co., to make sure that businesses understand what the changes are and how to navigate them. And third, when they're particularly onerous, we're going to fight back, because someone needs to push back on what's happening.
We talked a little bit about AI. I feel like this is just, this 2024 AI, but just technology in general, with the shortage of employees, and just, you know, for many years, technology has allowed small businesses to really, in some ways, act like much bigger businesses than they are, because there's all of this affordable cloud-based technology. So can you just talk a little bit more about AI and how you think small businesses can really leverage that?
You know, I actually think small businesses are going to adopt and benefit from AI faster than big businesses. When we talk to a lot of big businesses, there's a lot of this about what are the rules and what internal rules do we need to place, and do we need, you know, there are companies who say we need a moratorium on its use amongst, you know, our 5,000 employees. Small businesses aren't doing that. What they're doing is saying, here's the work I need done. Can I use AI to do it? And they're experimenting. And that's exactly what you need to do to kind of get the edge. So I see this new technology as a real empowerer and enabler, in particular of small businesses, you know, in the same way that the internet was as well. You know, when I grew up, my mom had a small retail store. She screen printed T-shirts. Her customer base was the people in our small town. There was no way to reach anyone outside of our small town. Today, she's now retired, but the people who ran that business, now they can sell T-shirts all over the world and reach people from the same small town. And so in the same way that the internet has done that for small businesses, AI will as well.
Yeah. Last question. We talk about this small business, big company ecosystem a lot here at the Chamber, because we're advocating for both. And we believe that they need each other to exist. They need to coexist and work together. Can you just talk a little bit more about that trend? Because it's accelerating, this reliance and need for each other. Can you talk a little bit more about that?
Absolutely. It angers me when I hear politicians or candidates or whatever, try to say, well, I'm for these type of businesses, but I'm against these. So I'm for small business, but I'm against big business. And what they fail to realize is that it's all interconnected. That T-shirt shop, that screen printer that's selling across the country, around the world, well, that small business relies on a big business for some of the supplies. They rely on big businesses to transport those supplies. They rely on big platform internet companies to reach their customers. And then they rely on big financial platforms to process the transaction over the internet so that they know that they actually got paid. They're not waiting for a check in the mail like we used to. And so those small businesses couldn't grow and do what they need to do without the big businesses. And by the way, the big businesses couldn't grow if they didn't have small businesses to serve. And so there's really no way to separate these things. This is what makes the American economy so remarkable. It's the reason we grew over 3% last year, because we have big businesses bringing scale and scope. We have small businesses bringing innovation like AI and its use to the table. And you put all of those things together and it's like a magic secret sauce. So as you can tell, we're passionate about this ecosystem because we think it's what really works.
Yeah, and we are on Co too. We're writing about it all the time, and we're writing about what big businesses are learning from small businesses and what small businesses learn from big. So I think that's a great place to end it. I thank you so much. I really appreciate this, and I know our audience loves these small business updates, so thank you. Of course, I also would like to thank our sponsors, Brevo Dell Technologies, FedEx, Oracle NetSuite, Iron Mountain, and Walmart Business for all of your support. And I just want to make sure that I repeat that on the Watch Live page that you're looking at right now, we have some articles to help you, some co-articles through a lot of what we talked about today. And we have a very exciting announcement coming to you in an email soon is the chance to register for our February event, which is the first of a brand new series on Co called Ready, Set, Scale. So I'm really looking forward to debuting that and having you all join us. Thank you so much, and thank you, Neil.
Thanks for having me.